let me get the Steel Secretary into the conversation as well. I want to understand from you what the outlook is as far as demand is concerned, and specifically I want to address concerns that are being raised by Indian industry. Sajjan Jindal, in a conversation with us, has very clearly said that there is a need for the government to impose higher tariffs, higher duties, especially on imports coming in from China. What is the government's view? Do you believe that there is a legitimate case at this point in time to impose higher tariffs? And if that were to happen, what is the impact and the implication on the consuming industry? Because you will have to find that balance.
Thank you. I will start with the consumption side. So, as we know that right now the per capita consumption in India is about approaching 100 kgs per person per. Now, if we see at the historical data, this is an inflection point as far as steel is concerned. And what has been seen is that as soon as countries reach about 100, their growth increases significantly. And that is already into picture, because this first half of 24-25, we have seen a growth of about 13% in steel consumption. So yes, on the demand side, I don't see any problem. In fact, if this growth continues with, again, I will refer to the Finance Secretary who mentioned about 10 lakh crores. So government push in infrastructure, public demand, public spending, we will need about 300 million tons of capacity by 2030, which is at present at 180 million tons of capacity. So that means 120 million tons of additional capacity, which means approximate investment of $120 billion, which is 10 lakh crores in Indian rupees. And if that investment has to come, so I'm migrating to your second question. So if that investment has to come, then our industry has to have that kind of profitability that they are able to make that investment. Now, if that will not happen, then probably by 2030, we will become a net steel importer if our demand continues to rise and our production does not increase. Coming to the issue of profitability, so yes, there have been concerns in last almost a year, and especially in last few months, 6 months, that dumping is happening at the international level and steel prices have come down. In fact, the Indian imports for first half of this financial year have increased by roughly 41%, and exports have gone down by 36%. So that's a valid argument of the industry that steel prices are depressed. Inventory levels in steel companies have increased. From normal 15 days, 16 days, they have increased up to 30 days. So there is a genuine problem and we are aware about that. So there are multiple ways of trying to protect the domestic industry. One of that is increasing the basic custom duty. The only problem is that 62% of our imports are from FTA countries. So if we increase basic custom duty, there is no impact on these 62% imports because there is no duty. The second option is safeguard duty, for which industry will have to approach the DGTR.
Haven't they done that already?
I don't think so. I don't know whether if any steel manufacturer is here, but they are, I think, preparing to do that. And third is anti-dumping, which again has a process. So the later two have processes which the industry has to take on their own and approach the DGTR. The first one has its own limitations because majority of imports will not be covered by BCD.
So you're saying that at this point in time, even if you were to bring in higher tariffs, it may not have the necessary impact because it's coming via the FTA route?
Yeah, so it will have impact only on 40% or roughly 38% of the imports, not on the majority of the imports.
So is it an active consideration at this point in time?
It is under examination because one of the major imports, wherever they are coming from, some of them are not covered in FTAs.
Let me open up this dialogue to a larger issue which impacts everyone on this panel and across sectors, and I'll start by asking you, Steel Secretary, privatization and disinvestment. There's been a lot of talk and a lot of speculation around whether RINL will be up for privatization or disinvestment, NMDC at some point will be up for privatization and disinvestment. I don't want you to necessarily talk about any specific cases, but do you believe that there is a case today for disinvestment or privatization of public sector holdings within the steel sector? And then I'll go around the rest of the panel for their view.
Yeah, so if you say in general whether there is a case, yes, there is a case for at least some of the plants which are not doing well. You mentioned RINL. RINL is in deep financial crisis. So that's I think, and there's a 21 cabinet decision which says that RINL will be disinvestment. Then there are practical constraints on disinvestments because of which it is not happening right now. But on a principal basis, yes, some of the public sector units which are not doing well, I think if they are disinvested, fresh private sector investment will come, and both efficiencies will come. Whether RINL will be disinvestment immediately, there are issues on that.
But is this something that your ministry will push, at least as far as your sector is concerned, as far as the steel sector is concerned? Because as you said, you require a significant amount of capital to come in, and that capital is likely to come in only from very few private sector players who have expressed interest already.
So basically we should also look at that fact that out of the 180 million tons of capacity in India, we have only about 30 million ton which is from public sector. So 150 million ton is already private sector. So it's not as if this sector is dominated by public sector. Having said that, some of that 30 million ton is not well run. So there is a case for disinvestment of that capacity at least. But private sector investment will have to come whether disinvestment is there or not if we want to have 300 million ton by.
Absolutely, to achieve that capacity target. Ms. Shah, let me address the demand issue with you as well as the FDI issue with you, and ask you this in the backdrop of the challenges that Bangladesh is faced with, because that has taken a significant share of global textile trade. And the likelihood of some of that moving to India, what's your own expectation and assessment?
Thank you, and at the outset, let me thank FICCI, and this is a great opportunity, of course, for interacting with the captains of industry. The demand insofar as textile sector is concerned, presently the size of the sector is about $170 billion, which is, something like 14.35 lakh crore. The domestic demand is robust and growing. We have a large domestic market, and with increase in disposable incomes, textile sector is one which will certainly be seeing growth. Our target is to increase the size of the sector from about $170 billion to $350 billion by 2030. And we are looking at a much larger share of the global, export pie, as it were. Presently, we are exporting something like $38 to $40 billion of, textile products. And within the $350 billion of output, we are looking at $100 billion of export. So which means that the share, which is currently around 4% of the global export, we are looking at a much larger share of the pie. And as I said, the domestic demand has been fairly robust and should continue to be. It is the global trade in textiles for the last couple of years, 2 years specifically, after we had a historical high of exports in 21-22 when we touched $44 billion US dollars, and thereafter 2 years have been slightly dull on account of certain geopolitical events, and also on account of the inventory buildup in 21-22. But we are now seeing positive signs in terms of growth in the export sector as well. And in the month-on-month kind of estimates which have recently come out, especially in the apparel sector, we are seeing a growth of almost 35%, and overall for this textile sector of 7 to 8% as compared to last year. So these are positive signs. And we are wanting to textile sector, India has a unique sort of a position because we have the entire textile value chain present in the country, which is rare, and apart from a few, other countries, it's there in India, right from fiber to fabric to the entire processing chain, apparel, garments, technical textile, fashion. So I think we come with a position of strength that way, and I would like to think that further investment and export opportunities will come India's way based on our own strength in the textile value chain. The geopolitical events and events in Bangladesh would certainly have some bearing, whether it would translate more perhaps in the medium to long term, when our own capacities are also getting strengthened through some of the key initiatives that have been undertaken by the government, so that we have more large scale and size of manufacturing and world-class textile infrastructure which gets established, and some of the the bigger brands, the international brands, they are already working with us, but they are looking perhaps to increasing their share over a period of time. So we do see these things happening as we go ahead. Insofar as FDI is concerned, we are looking at huge investment coming into the textile sector. And while the domestic industry and the major players will certainly play a very important role in that, we certainly are looking at more and more international players coming into the textile sector as well. The FDI in since 2000 has been something like $4.5 billion. So international players are there and they're coming, but certainly we are looking at a much larger share. And I think they are also looking at the domestic market, which is large and growing, and manufacturing in India for the domestic market and manufacturing in India for the export market is something that I'm sure is likely to attract the foreign players.